Welcome, everyone. This is like take 3 for me. I'm going to try and keep it short and sweet for you. Today, I'm going to talk about the dividend evaluation for MMTLP, or Metamaterial Torchlight Preferred. I am just over the moon that people are starting to get the drift that the dividend has a good potential of being over 30 bucks. I've been using a 30 to 34 since February. Oh no, I dropped that. 30 to 34 since February. And people have been looking at me like I have lobsters crawling out of my ears. With that being said, this is not financial advice. I'm just telling you a story. And I got like this, purposely put this crazy hair. Because if you say, well, I took advice from that girl, and then they see my video, well, she has crazy hair. Why would you take advice from her? Ha-ha! It's my hold harmless disclosure. This is a story for entertainment, which you may or may not listen to, and you may or may not be entertained by. That's my disclaimer. In my link below, I talk about different evaluations. And I do admit I used some wrong numbers. So I'm going to use different numbers today. It's not a bad thing. I think you'll be happy if you read this compared to that. Because oil's gone up. It's $83 a barrel today. I see a lot of people throwing around the term lease. Don't use lease. Don't use lease. We're using working interest and revenue interest. Ding, 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 ding. Working interest and revenue interest. Okay. Like when you buy a franchise business, I don't want to use franchise, but I think when you buy a franchise business, you have to pay licensing to get the working interest in this franchise, right? To use their stuff. It doesn't matter what the lease cost is of the land. That's erroneous. Dividend evaluation. Now, today's oil price is 83 bucks a barrel. Woo! In my previous DD, I have talked about how good it was, and oil was only 70 bucks a barrel, 70, 74, and I went conservative. So it's 83 today. Let's be a little conservative. Let's say it's 80. That's not the price we're basing our assessment on. That's just market price of oil in a barrel. If it's in the ground, you pay a different price. If you know the amount in the ground, you pay a different price. This is how you figure out that price. Again, this is based on Texas A&M's guideline for landholders when they have some mineral rights lands, how you go about negotiating and what prices to expect and what prices other companies will expect. Okay. 80 bucks a barrel. That's your revenue. That's sales. Gross. Cost of goods sold. Cost of goods sold for barrel of oil for a company to produce it. That's extracting it. And then I think it involves rig depreciation. That is a good question for that wonderful accounting man. Trading Secrets, I think, is his name. Does this account for rig depreciation? It's about 25 bucks for shale oil. You are left with $55. That's your gross. Sales minus cost of goods sold. That's your gross profit. Now, this is where revenue starts to come in. Revenue interest on Torchlight, Texas lands, other mineral rights holders such as McCabe, Magdalena. So, Torchlight's mineral interest, not working interest, the revenue interest. I had to record this because I kept like subconsciously confusing them. In my mind, I thought I was saying the right things, but I wasn't. Take 3. Okay, Torchlight's revenue interest on the sales, just over 49%. We'll say 49. That's not how you do it. $55 is your gross. Oil in the ground is evaluated at 12 to 18% of that gross. 12 to 18% of 55. So, that's not in the barrel in the ground. So we'll be conservative. We'll say 12% times 55. That's $6.50. And Torchlight gets 49% of that. That's $3.2. 3.2. So, we have different evaluations on the paper. We have 2.1 billion barrels of oil. We have 3.7, and then you have like 5.1 is the high end. We'll go with the low to medium. I like the conservative. Okay, 2.1 billion barrels. You get 3.2. Torchlight gets $3.2 for every barrel. If you multiply the two, whoops, times 2.1, 6.72. We'll say 6.7. Let's go 6.5. Sale. 6.5 will go a little bit down. Maybe they negotiated. 3.7 times 3.2. 11.82. We'll say 11.5. All right. That's how much the sales would be. Again, that's not what you get. There's a tax man. Two things are certain in life: death and taxes. You got to pay the tax man. This is America. You got to pay your tax man. Tax man, his rate is 21%. You keep 79. His rate is 21% corporate tax. So, and you got to take out the underwriter, which is 10%. And then minus the underwriter. Oh no. Let's try that again. 6.5. That equates to 4.6 billion. Net. It's after taxes. The higher end, you have 11.5. Minus the tax man. Minus the underwriter. 8.1 net. Okay. There's a couple different numbers out there for outstanding shares. George said just under 165 million, but then on the Trading Secrets, he reviews the document which says that there could be up to 175 million. Let's go with the 175 million. So, low end, 4.6 divided by 175 million. That's 26. And on the median end, $46. I think it's going to go per barrel, but it's going to show up as a price per acre. They're going to say, well, it was sold for this many on an average price per acre. They're not going to show you price per barrel. They're going to tell you price per acre. We already know how many barrels there are. But it's going to come up, press releases price per acre. There's not a whole lot of infrastructure on this property. Less infrastructure, but more oil. You can always build more infrastructure. You can't always make more oil. So, TLDR, 26 to 46. I'm sticking with my median ground of 30 to 34. I've been saying this since February. And I had numerous people tell me that if the dividend is above $30 or at $30, above $30, they'll get my name tattooed on their dupa. And I said, go for it. Get my name tattooed on your dupa there. You can, I guess, tattoo whatever name you want. Or you can say late for dinner. Don't call me late for dinner. You put late for dinner on there. And then one day, your wife's boyfriend is going to be like, why do you have late for dinner tattooed on your butt? And you can try to explain your way out of that paper bag. All right, so again, low, conservative, higher. It may or may not happen. It could be a spinoff. But with how hot oil is and how much Meta is trying to expand Meta, it seems likely that why wouldn't you just sell it and sell the asset and use that money? Torchlight has already given Meta quite a bit of money. They had 2 public offerings that raised money for Meta. The last that you know of was in June. Before then, it was in February. It actually cleared Torchlight debts, and then it gave Meta Materials extra money to work with. And I'll put in the link below to that article. It may or may not be a spinoff. I don't think it's going to be a spinoff. The article, the latest press release of Meta Materials gave me hope. Plus, the final 2 rigs that they have to drill on the contingency is, that has already been approved. So they're going fast. They're going fast. The pad might already be there, actually. The pad might be there. They might just start drilling. They might be drilling now. I don't know. All right, guys. That's my video, and I'm just so happy to see that there's more positive dividend videos out there. I will catch you later. Goodbye. Hello again. You might notice the lighting is a bit different in this room. The time of day has changed. I'd like to make an addendum to show you my methodology, just so you get a grips. So today is the end of October in 2021, and oil is at $83 a barrel. Everyone who loves Meta has been in it for a while, has the recording, or heard the recording of George talking about the squeeze. He didn't call it squeeze. When it's projected to be higher when it comes in the market. And then the value of the dividend before he gets cut off. He said, I don't know, it could be anywhere from $1 to $20. And then he goes, oh, in fact, it might be over $20. You know, price of oil has gone up. And then he gets cut off. Let's use my formula to show you that this works in sync with that time. At that time that he said that oil was about $60 a barrel. Okay? It was a bit over, but we'll say 60. $60 a barrel, okay? Minus our cost, which is about $25 to drill it out of the ground. All right? So 60 minus 25. That gives us 35 gross. Okay? 35 gross. Boop. Times the 12%. Again, valuation of oil when it's in the ground. Based off this, you know, in Texas. This is Texas pricing. I use the Texas guide. It's in Texas. I figure it was a nice dovetail, synonymous dovetail. Okay, 12%. So 35 times 0.12. And that's 4.2. Now Now Torchlight gets 49% revenue interest from that. So 49% of 4.2. That's $2.05 per barrel. All right. $2.1 to 3.7. Again, estimated 2.1 billion barrels of extractable oil and 3.7 billion barrels of extractable oil. And we're saying 205. And we're going to multiply that by 2.1. So the first sale you have 4.3. And then the second sale you have 7 billion times 7.5. We'll just say 7.5. All right, 4.3, 7.5. Scientific figures there. Okay, now. Actually, well, be one less than that. I'm not going to get... Thanks, Miss Lawson. I'm not going to get into that. Okay. Low end, median end. minus the tax man. So 4.3 times the tax man. Account for underwriter. 3.05 billion. And then figure 2. 7.5. Oh no, 7.5. Minus corporate tax. 21% minus a tax man. 5.3 billion. At the time, Torchlight had 145 outstanding shares. Were they planning on their offer then to take it up to 165 million? I'm not quite sure when they planned that offer there. They might have planned it in June. Or they might have planned it ahead of time. I'm not sure, but we're going to go with this. Okay, low figure. Let's do 145 shares. 145 million, I'm sorry. 21, which is about 26. Now, that's at 145 million outstanding shares. Had they planned on this all along, that'd be 17 and 30. So, like I said, $1 to $20. It could be over $20. He wasn't too sure of the price of oil at that point. He really hadn't kept up and with the numbers and everything. But this is kind of on par, this range here, with what George said. So again, stating back to my price range earlier in this video of 26 to what, 40, 46? That kind of keeps up with the price of oil. Price of oil at that time of George's speech was around $60 a barrel, and today's 83. So again, it sort of shows you how it's relevant. Okay, thanks for listening to my speech, and that's how I'm checking my numbers here. Remember what George said. Thank you.